A warm welcome to all our viewers who are joining for the monthly update presented by SC Securities. The main focus of today's presentation is to provide you some insight with regard to changes in market dynamics, developments in the economic landscape, and also to provide you with a detailed technical analysis on the all-share price index. Now, an eminent question that crossed the minds of many investors is whether the market is overvalued or could the all-share price index come down further? Before answering that question, let me share with you some insight on how the market have behaved over the past 12 years. Now, this is a summary of the intraday high the all-share have reached in each of the years and its corresponding price earnings ratio. In 2011, the market made an all-time high, an intraday all-time high of 7,863 in February 2011, and the market PE at that point was 29.5 times. Since then, the market has gone through certain waves, and a new all-time high was reached this year on 29th of January, when the all-share reached 9,025, which was the intraday high. However, there's a significant difference compared to the previous all-time high. The market PE was relatively low. It was at only 14.9 times compared to 29.5 times what we saw during 2011 all-time high. In between these two all-time high values of reported in 2011 and 2021, the highest point the all-share reached on an intraday basis was in 2015, just after the election, when the index reached 7,670.98. Even at that point, we could see that the market was trading at a higher PE multiple of 20.5 compared to the present lows what we are seeing now. Now, to answer the question, is the CSE overvalued? What we have done here is basically a simple comparison of certain indicators as of now, when the market reached an all-time high in January 2021, and what they were during February 2011. So starting with the market indicators, the all-share price index reached 7,863 on 15th February 2011, and we reached again 9,025 on 29th January. So the absolute gain from the previous all-time high was approximately 1,162 points. And from that point, now we have retraced roughly about 1,900 points as of 31st March. If you look at the market cap was 2.6 trillion. And in 2021, January, when we reached the all-time high, it was at 3.8 trillion, a significant change in the overall market context. In terms of the PE, as you saw in the previous slide, PE was at 29.5. Now it is at 14.9. Price to book value was 3.5 times in 2011 when we reached the all-time high. This time around, it's only 1.5. So you could see that in terms of these indicators, the market is not overvalued, even though it reached a new all-time high when comparing with the previous all-time high statistics. Moving on to the economic indicators. The prime lending rate in 2011 was 9.17, whereas in 2021, when we reached this new all-time high of 9,000 on all-share, the PLR was just 5.9 times. So it's a reduction of 327 basis points. Compared to that level, it had further come down during the past 2 months. The average fixed deposit rate is 128 basis points lower compared to 2011. The average lending rate is 400 basis points lower. The statutory reserve ratio is at an all-time low of 2%, 500 basis points lower. And the policy rates are also significantly low compared to 2011. They are right now at 4.5% and 5.5% compared to 7% and 8.5% what we saw in 2011. So you could see that on a fundamental basis that the all-share is not overvalued, though it reached 9,000 in a very short span. This correction in the market was long overdue. That is one reason why the market reacted rapidly to reach this level of 9,000. Now, 2020 was a special year for the all share. It reached a low of 4,247 on 12th of May, soon after the market recommenced trading after the lockdown. And from that point, it gained roughly about 5,000 points to reach this new all-time high of 9,000. And it had been trading within this trend channel, what we have highlighted in red. So it was respecting these trend support lines and the resistance lines. And in early January, with great enthusiasm among the investors, the market broke through this resistance level and went up rapidly. Since then, as all of you know, that the market has gone through a correction with certain regulatory issues also contributing towards this. And now it has reached back to its old trend support line. And now this trend support line have been retested several times, and we are confident that this trend support line will be very strong, and the market should respect, and the market should again start moving up in this ascending trend channel. Now, comparing the all share index with the regional markets, in terms of PE, Sri Lanka is one of the most attractive. And if you look at the fundamental valuations, it is also one of the most cheapest markets. Now, all share as of 31st March is trading at a market multiple, PE multiple of 15 times. Whereas our regional markets such as Indonesia is trading at 22.8, London is trading at 26, US is trading at 29, India is trading at 34, Singapore is trading at 49, and so on. So in terms of market PE, you could see that Sri Lanka is still fairly valued. Moving on to the fundamental side of it, 54% of the listed companies in the Colombo Stock Exchange is trading below a price to book value of 1 time. Or in other words, in layman terms, they are trading below its net assets value. More interestingly, 36% of companies are trading at a PE less than 10 times. Now, this PE is calculated based on the trailing 12 months earnings. So you could see that most of these companies are still at low valuations, though we have reached, the index reached around 7,200. Comparing the performance over the past decade of various markets, you could see that most other markets have significantly gained over the past decade. Starting with more developed markets such as Japan have gained 200%, Dow Jones have gained 166%, India, Bombay Stock Exchange have gained 154%, Hong Kong have gained 19.2%, moving into Asian territory, Indonesia have gained 61%. However, the Sri Lankan market have come down by 3.5%. So when the rest of the world have moved such a long way over the past decade, we have been stagnant and we are still 3.5% lower than what we were 10 years ago. So all these things indicates that the Sri Lankan market is not overvalued. And in the previous slide, we show that it should support the present trend channel and start to move up. To discuss more about the economic developments in the economic landscape, I invite my colleague, Nuwan.
Thank you, Charitha. As he stated, I will be going over the economic aspects as it pertains to Sri Lanka. And one of the major topics that we would like to discuss is something that has been in the news quite recently, which is the port city coming online. But before we delve into that, let us look at some macroeconomic level indicators. So here we believe that with inflation on the rise, coupled with the depreciating rupee, we expect interest rates to actually increase gradually from the low level it is at the moment. So now if we look at the inflation rate on a monthly basis, ever since Jan 2021, we have seen the inflation rate actually increase to its current level at 4.1%. Furthermore, we have also seen from the start of the year where the dollar to the LKR was at 186, it has gone up to 199 as of 29th of March this year. This can primarily be attributed to the quantitative easing mechanism that the government has undertaken. This, coupled with the rising inflation rate, actually puts upward pressure on the Central Bank of Sri Lanka to actually increase its policy rates. Although an expansionary monetary policy is in play at the moment, inflationary pressures will indicate that at some point the rates will have to increase. We predict that the Central Bank of Sri Lanka will do it in small increments, such as 25 basis points, as such, with the indication as to not actually adversely affect the stock market going forward. In terms of the balance of payments and the current account structure of the country, if we look at the current account of Sri Lanka, ever since 2012, we've always had negative current account position. However, in 2020, we saw this somewhat change in terms of quarterly analysis. So if we look at Q2, we finally see that there is actually a positive current account. And that has actually also translated into Q3. This is primarily on the back of the effect of import controls that have been placed ever since we came out of the first lockdown. We can actually see this translated in terms of total imports. However, we also have seen somewhat of a downward trajectory in exports as well. Ideally, what we feel is that for the country to really start gaining a positive momentum, that this line should move in the upward trajectory. In terms of our foreign debt positions, as of January 2021, the government's total reserves amounted to $4.8 billion US. As of this year, some of our outstanding payments are also coming online. So if you look at it chronologically, the government has 600 million in terms of a development loan that needs to be paid off in 2021. And additionally, another payment of $1 billion US in terms of an international sovereign bond issuance. If you look at some of the other outstanding purchases and loans that we have, Sri Lanka has close to $1.3 billion US owed in terms of the IMF. We must note, though, that this $1.3 billion does not come online this year. As of November 2020, the country's external debt obligation payments spanning from 2021 to 2025 amounted to 23.2 billion, which on a per annum average works out to close to 4 billion. However, we can see that there's some respite coming in. As most of y'all would be aware, there was a China swap deal of an amount of USD 1.5 billion that came online last month, which should actually provide the government with some padding when it comes to foreign debt obligation payments. So if we look at some of the key highlights in terms of news this month, I will of course delve into the Port City project, which should once it comes online, provide much needed respite for the government in terms of their foreign debt obligation position. But also what I wanted to highlight in this presentation was the UNHRC resolutions. And the reason why I say that is, whilst the resolutions were passed, whilst being seen somewhat of a black stain, we must understand that these resolutions are non-binding. However, extreme caution must be exercised, as this is seen as the first step in what may lead to potential economic sanctions down the line. So therefore, we do stress that the government must cooperate with the UNHRC in order to avoid this possibility from becoming a reality. Finally, I would like to talk about the Port City or the initial steps of the Port City project coming online. Ideally, the legal framework was supposed to come online in January, but after a short delay, a special legal draft which helps the establishment of a special economic zone in the Port City came through. Pending what we believe approval in the parliament, this will finally enable the government to attract much needed foreign direct investments into the country. Now, recently, ICRA Ratings actually put out a report that said FDIs would amount to somewhere close to US dollars 200 million this year. However, with this coming online, we And the government actually expects USD 1 billion to come into the country in terms of investment. Upon completion of the project, which should take somewhere in terms of best case scenario, 10 years to maybe 15 to 20 years, the entire project should bring in an annual income of close to $11.8 billion. In terms of what has been drafted thus far for the port city, it will be an economic zone that will be dollarized to protect everyone from a currency that does not have a credible anchor. In this case, it is the Sri Lankan rupee. All investment applications will have to be made via foreign currency. No domestic bank will be able to tap into or fund such investments by tapping into their foreign currency banking units. All land plots within the port city will be sold in US dollars, whilst all workers will be paid in dollars and be tax-free. There will be certain provisions within the port city that will also allow rupee denominations for certain transactions, although the clarity on those will be given later on. The port city will also primarily have offshore banking facilities, which will be under the purview of a special commission set up within the port city. And it is this very committee that will also be will have the task of looking after or regulating a separate stock exchange, which will be operational within the port city area. I will now hand it over to Harin and Saliya, who will actually go over the technicals regarding the all share. Over to you, Harin.
Thank you, Nuwan. I'll be now going ahead with my technical analysis on ASPI. Sorry. Thank you, Nuwan. I'll be now going ahead with my technical analysis on ASPI. Firstly, I'll be discussing the monthly chart, and secondly, the weekly chart of the index. Further going forward, my colleague Saliya will discuss the daily chart of the index. So the indicators that I have used are EML, 3 EML levels, and the RSI. So the RSI is 58.79 in the monthly chart. So we can see that there was a declining momentum in the year of 2015 to the last quarter of 2020. So this declining trend line has been broken, and the market has gone up to a level of 9,000, which makes it the whole all-time high, 9,025.82, where 9,000 is considered as the psychological area. So after reaching that key area of resistance, the market has come down to the monthly support level at 7,000, 7,200. So here we can see that the index has got rejected somewhere around 6,850, where last month we had a big over there. So going forward with the weekly chart, so still we are in the monthly support area, which is 7,000, 7,200 area. So we do have a structure low, which makes it 6,850 support level. So the RSI is again 54.42, and breaking this 7,200 key area, which makes it a strong resistance level. My colleague Saliya will go through the daily chart, how it actually becomes a strong resistance level. So we can see that there was a clear rejection in somewhere around February, and again the structure low has been broken and has come down a bit again to 6,850, and now it has come again to 7,200, which makes it a resistance level, because last week we had a high, which is 7,200, 1.35. So breaking this 7,200 key area and successfully breaking it would actually make the index to reach 7,500, 7,600 key area. Over to you, Saliya.
Thank you, Harin, and hello to every one of you. Thanks for joining. I will be taking you all through the daily chart. And at the same time, in order to really take note of what is going on and how the price action is taking place in the market, I thought of sharing all these indicators with you all so that we will be able to get a clear understanding, probably to increase our confidence in the market, which is very useful right now, the way the market is turning up. Therefore, first of all, I would like to highlight the behavior of the RSI and the MACD in order to understand how the momentum is taking place. As you can see, the RSI is within a rounded bottom pattern when you are looking at the lows of the RSI, which indicates that the momentum had slowly built up to the bullish territory. At the same time, if you look at the MACD, which had been continuously giving us a bullish divergence indication while the hemorrhage was taking place in the market. That was something which was very important for us to kind of increase hopes of what was going on. And thereafter, we can see that the parabolic stop and reverse values have started coming below the index lines, starting from about the 24th of May, or rather 24th of March. Going a little bit further, you might see that the channel that I have drawn here, which have been tracked by many analysts, and you can see that the channel, the two channel lines are in black, and the channel resistance line was broken on the first day of 2021. That was on the 4th of January, where it broke above that line and closed at 6,894. Thereafter, we can see that the market rallied further up to about 31%, a little over 32%. Yeah, about 32.5%. Thereafter, with the retracement that took place, which turned into a correction and unfortunately came into a bear market territory when it broke below 7,220. And from there onwards, we can see that after hitting that bottom of 6,852, you can see that there is a noticeable development that has taken place, where the lows have improving and giving a higher low formation. At the same time, the higher highs also was noticeable at 7,000 points and 7,200 points. In this case, on the 23rd of March, we can see it tested 7,000. Then thereafter, on the 25th of March, we went and tested 7,201. Thereafter, further on, if you look at that significant move level of 7,200, you can see this that resistance had been tested on several occasions. In fact, on 3 occasions, I would say 4 occasions, it got tested. On the first instance, you can see on the 11th of February, it went and tested 7,200 and rallied up. Thereafter, the trend kept on coming down, and with that bearish momentum, we can see that it came down below 7,200 and rallied back up to test 7,000, almost 7,500, but couldn't hold. And eventually we had we see the present low of 6,852 taking support and giving a swing low formation. And now once again, today we saw as the first day of the month of April, we retested 7,200. In fact, we went up to 7,222, but closed at a tad below 7,200 to close at 7,193. Our expectation, as Harin also mentioned, is a close above 7,200. And based on the present the price action and also the momentum that's building up, along with the volume activity that is taking place in the market, and also the fact that the strength is building and the circumstances are moving to the positive area, we expect the 7,200 to be broken and hold that level as a strong support moving forward, and thereby moving into that significant resistance area of 7,500 to 7,550, because you can see once again the index line will meet up with the resistance line of the channel once again around 7,500, and also the resistance one of 7,538 is also confluencing with that area, within that area. Therefore, this 7,200 being the support, and the first resistance at 7,500 and 7,550 is what we are expecting. And that's our take right now. And with that, let me hand you over to Charitha once again.
Right. Thank you, Saliya. And thank you all our viewers for joining with us. And I hope that this presentation was insightful, and we hope to reach out to you soon. Thank you for joining.